So good evening, everyone. Good evening. So good evening, everyone. I'm just welcome. I'm just going to give a few more people to come on. So if you are on, whether you're driving or at work or at home or wherever you are, just call a friend and we are going to start in the next 60 seconds. So good evening, ladies and gentlemen. Thank you for taking the time to join us again. And if it is your first time, we welcome you to part 2 of NCB's Invest Like an Owner series, Spotting Winning Stocks. My name is Paula Brown, and it is my pleasure to be your host this evening. As you know, we at NCB, we are on a mission, a wealth mission, in providing all our fellow Jamaicans with the information and support to meet their investment goals and working with you, our Jamaicans, on your wealth journey. Whether you're aiming to own your own home, whether it is your first time or an investment property, preparing for your children or child's tertiary education, pension, or just general wealth creation, we are here to help you achieve those goals. So, if you missed our part 2 series that was aired on February 18, we invite you to view the recording of part 2 on the Invest Like an Owner series on our YouTube channel. When you have found it, please remember to like it, subscribe, and to share it. Share the knowledge. Don't be selfish. Okay? So today on our panel, we have a total of 25 years of a wealth of knowledge and experience. And I am going to ask my panelists to introduce themselves. Before they introduce themselves, we are going to this evening, we are going to take on a different type of structure for our presentation. We are going to deep dive into questions that we got and garnered from our last session. And because we had limited time to address all these questions, we really wanted to take the time to address them this evening. We value the questions and we also value you understanding and gaining the knowledge and have that time dedicated in addressing these questions. So I'm going to ask my panelists, who I really do enjoy listening to them, and I'm sure you're going to enjoy as well, to introduce themselves. And we're going to start with Thea.
Hi, Paula. Thank you. Good evening, everyone. I'm Thea Christian, Senior Research Analyst here at NCB Capital Markets. And I'm excited to be here with you guys as I reflect on this session. Growing up, I've always wanted to help people, and being able to provide financial advice to help people to generate wealth. It's just absolutely amazing, and I'm happy to be here with you guys tonight.
Thank you, Thea. Raju, not Raju. I'll leave Raju to the end. But I want to talk with Jan. Jan, please go ahead.
McDonald, manager wealth management at the Maypen cluster, and that includes Maypen, Old Harbour, St. Jago, and Linstead. It's a passion of mine to help my clients achieve their financial goal and just being with them on every step of their financial journey.
Thank you so very much, Jan. I think you were breaking up a bit, but we do appreciate you being with us this evening. So Janiel is the manager and she operates out of the Maypen branch, and she has a cluster of branches that she manages with advisors. So next, Raju, please introduce yourself.
Hi, everyone. Good evening. Raju Godin, Senior Research Analyst. I'm also happy to be here to answer the questions. Pass on knowledge that I would have acquired since being in the industry. I believe that one of the best ways for us to uplift ourselves as people is for us to generate wealth, generational wealth that we can pass on, that we can benefit from, not just for ourselves, but also pass it on to future generations for the betterment of Jamaican whole. So I'm just happy for an opportunity to contribute to that, admirable goal.
So Raju, we're not hearing you. We're not hearing you.
Can you hear me now?
No, you're breaking up. You're breaking up.
Let me see. How about now? Can you hear me now?
It's a bit choppy. So I'm just going to say Raj is one of our senior analysts in our research unit. And he does have a great passion for helping others and to help persons to generate wealth. So thank you so very, Raju. I think you can try to change your mic or something until yeah. But so we're excited and we are getting ready. So guess what? We do value your feedback and we value your questions. So even if you were not a part of the session last week, and you're here for the first time, again, welcome. And if you have any questions that is budding from even the questions that are being answered, we ask you, feel free, go to the chat, drop it in there. We have a team that is behind the scenes that is ready and waiting to look at it, and we are here ready to give you those answers. So let's get started. Are we excited, team? I'm excited. So to my panelists, and I just wanted to give some short answers from all three of you. What does it mean to invest like an owner? I want it in your layman words, in your words. What does it mean to invest like an owner?
I'll start with Paula. So when I think about what it means to invest like an owner, renowned investors like Warren Buffett and Peter Lynch comes to mind. But if we even come closer to home, Michael Leachin comes to mind. These men don't just buy stocks. They're buying the business. And so they don't just glance at the stock price. They dig into the fundamentals as though they're the owners of these companies. And history has a lot of investors who treat stocks like lottery tickets that follow the herd, that panic at every downturn, but most of them eventually lose wealth. But for those people who saw themselves as owners, holding, buying great businesses domiciled in strong long-term growth industry, they have built generational wealth. And so when I think about investing like an owner, I'm not obsessing over daily stock movements. Instead, I'm focused on the company's vision. I'm focused on the company's market position, the company's financial health. Because let's just imagine if the stock market was to shut down for 5 years and I own a company. Would I still want to own that business after 5 years? If not, then I'm not going to own it now. And that's where I am when I think about investing like an owner.
Thank you so very much, Thea. Anyone else? Oh, let's move on. That is excellent because it goes back to you know, the laws of wealth creation, and then having a certain framework in place in terms of how you invest. And it, you know, we could go on and on in terms of how you operate as an owner, but you have to have foundational knowledge and a philosophy in how we move forward. So I'm going to ask the next question because we are very appreciative of the time. So team, what's one misconception people have of investing? So I'm going to throw this out at Jan first.
All right. So one of the main misconception, Paula, is really that you need to be wealthy to invest. You need to have one big load of money to invest. And that's is what it is. It's a misconception. You just need to start. So you decide on how much you can invest on a monthly basis. You set a recurring order and you just be consistent. Just start.
So I like that. So one principle that came out from your answer, Janelle or Jan, is you persevere. It forms part of our 3 Ps. It's our 3 Ps in our principles in investing. And we talk about predicting, planning, and persevering. So I like that. I like that. Did you have anything to add, Raju?
Can everyone hear me now?
Oh, you are a bit
Gosh.
still low.
I'll come in here, Paul, as well. I
Yes.
think one of the misconceptions that we have is selling stock when the stock price drops. So investors sometimes just focus on too much short-term gains or losses. And of course, this can lead to impulsive decisions based on market fluctuations and emotions. So rather than the long-term investment gains, stock prices move up and down every day, and they tend to
Yes.
trend up and trend down for long periods too. But it doesn't necessarily mean that the investor will experience a loss. The market moves up and down. We have to go with the ebbs and the flows.
Well, perfect. Thank you so very much, Thea. So coming from our presentation from the 18th, it was last week. Oh my goodness. Tell me that the month isn't running quickly. How do we pick winning stocks? How do you find good stocks to invest in? And that I believe, is the foundational question to most investors, because they just don't know where to start. And I'm asking Thea, can you just kind of help our audience just to give some foundational principles or feedback or tidbits or whatever you can give right now? How do we find good stocks to invest in?
Well, as you know, last week in East State, we had our presentation, how to select winning stocks using fundamental analysis. And the truth is, to find those stocks, as I said last week, you have to roll up your sleeve and get muddy, because what fundamental analysis does is really to help you to get to know the business at its core, what drove the past success, what is going to drive future performance. So in selecting winning stocks, we want to look at the company's financial health. And this means looking at the revenues, the profit, and we want to see consistent trend in these metrics. It's not just, oh, a company did well in 2021, but then it recorded loss between 2022 and 2024. No. And of course, we want companies that, we know that companies will experience challenges. That is fine. However, I think it's their ability. We at NCB Capital Market believe it is their ability to rise above these challenges, their competitive advantage that will allow these companies to remain resilient, to stand out, and that is what is important. So when we think about selecting winning stocks, how have they improved their efficiency, their business strategy to adapt to changing times? And again, we want to invest in companies with strong management team, because these are the people that is driving the decision of the business. They're steering the ship. So we want to know that they have the expertise to navigate the risks, the challenges, the uncertainties that comes with running that business. And of course, you find winning stocks in long-term growth industry. And we cannot overstress that, because when you're in these long-term growth industries, they're able to weather the storms and to just come out resilient.
Yeah. And I love what you said, because those still go back to the laws of wealth creation. You know, the laws in terms of ensuring that we get into we own a few high quality businesses. You spoke about that. You spoke about thoroughly understanding these businesses. You know, you also spoke about ensure that these businesses are domiciled in strong long-term growth industries. And those are three of the laws of wealth creation that you spoke on. So once you understand this, the job gets easier in terms of how we select these stocks. So I wanted to segue. One of the things that a lot of persons may have an issue with is that, you know, the whole word of risk, you know, and you know, you feel cagey. And I always say, when you take risks, you take it with being informed. So I wanted to talk about here, what are the risks involved in investing in stocks? And I want my listeners to pay keen attention, because at the end of the day, everything is a risk. But what makes a difference is the information that is provided to you. So Thea, tell us a little bit about the risks that are involved in investing in stocks.
Okay, so this is a big one, right? Because many of us invest in the stock market, but not all of us understand the risks involved. And let me put it out there that every financial investment carries risk. You cannot avoid it. So it's important to understand how to minimize the risk. And so there are various risks, and I'll just mention a few of them. Like, there's business risk, which is the uncertainty around a company's performance, which can impact the stock value. So factors like leadership changes, poor management, competition, industry shifts, and financial struggles all play a role. You have downside risk, and this is the potential for an investment to lose value due to market fluctuations, and it can be driven by economic conditions, investor sentiments, supply and demand shifts, or company-specific events. And so holding a large portion, for instance, in like a volatile sector, can lead to major losses if the sector takes a hit. But as long-term investors, we don't necessarily, or we shouldn't worry so much about short-term fluctuations. There's also economic risk, and this is like broad market forces like a recession, interest rate changes, and very much in our faces, currency fluctuations, geopolitical events. Again, this is in our face. These things can hurt investments. For example, a recession can slow sales and profits, and it drags on stock prices. And of course, there's the inflationary risk, which when inflation outpaces your investment returns, your purchasing power erodes, right? So this hits certain sector more than others. For example, the financial sector would have faced the brunt of high interest rates. And we know that, we saw that on our stock market, but we can invest in high dividend paying stocks that offset the inflationary impact, like a Carreras. So at the start, you know, I mentioned it's about minimizing the risk. And so we're re-emphasizing that you want to focus on the long-term investment horizon. Don't react to short-term market fluctuations, or don't try to time the market. We're going back to the first webinar, right? History has showed us that long-term investors tend to benefit from the compounding of returns. And so we want to stay patient, we want to stay disciplined in our investment approach, and just avoid making impulsive decisions based on emotions or market noise. So when you stick to that investment strategy, and if necessary, you make adjustments based on your long-term goals, not short-term market trends. And of course, we choose stocks that are high quality, and rest assured, guys, here at NCB Capital Markets, anything we put to market is top tiered. So we got you covered in terms of that. But of course, the risk is just a common denominator. It's just about mitigating it. It's just about minimizing it.
Thank you so very much, Thea. I love when you talk about taking the emotion out of it. And it is, again, a principle that we operate by. So in your perseverance, you have to take your emotions out of it. Look at the fundamentals, and of course, ensure that you have an advisor to speak with. Bounce it off of them and get the information. All right, so I love how Thea spoke about that. And I want to just segue. Raju, how's your mic? Your mic doing now, Raju?
And can everyone hear me now?
Yes, I'm hearing you loud and clear. Thank you.
Fantastic.
So, fantastic. Good to have you back. So we're going to I want to talk about now in terms of when it is a good time to buy or sell stocks. because I believe that they are covered how we should be investing in stocks. And I want, we had a webinar where we were talking about timing the market and time in the market. And I want Raju just to kind of just give a little guide in terms when is a good time for our investors to really buy or sell stocks, if there's such a thing.
Sure. So I'll take that because they're basically two questions in one question. So I'll take the first one in terms of when to buy the market. So my co-panelist here are saying that she always says is the best time to buy is yesterday. And the next best time to buy is today. So the answer is it's always better for you to buy now. And if anyone was on the first webinar where we spoke about time in the market versus timing the market, we would have given evidence, for example, where we gave the Carib Cement example, where we showed that had an investor, let's say 10 years ago, invested $10,000, made a $10,000 investment 10 years ago, they would have seen significant gains, double, triple, 10 times over the investment that they made 10 years ago, had they had the discipline to remain invested, ensure that they can resist all the market volatility because they know that the company has strong fundamentals, all of those qualitative and quantitative fundamentals that Thea would have mentioned, right? There's always going to be market volatility. There's always going to be gyrations. Thea would have mentioned those risks. A lot of the times we can't anticipate when those risks will come, which is why we need to invest in companies that have the strong fundamentals to resist all of those unexpected volatility. We can have risks coming from the market. We can have risk coming from a potential competitor, which is why when Thea would have presented on the fundamental analysis, we're looking for companies that have what we call a strong economic moat, which is basically them having a strong competitive advantage to resist competitive pressure. So as long as we're picking stocks that have strong fundamentals, it is better for you to invest now. And what we do here at NCB Capital Markets, we are recommending stocks that have strong fundamentals. They're so strong that even if the price might be down right now, even if the market might be frowning on this stock, we assess these companies and we know that they have the strong fundamentals. They have the potential to show significant growth in profitability. Even if there might be some volatility right now, our expectation is that in the long run, because remember, we're investing to create generational wealth. Generation is 30 years. So we have enough time to recover, guys. So and the philosophy here at NCB Capital Markets is as long as the company has the right fundamentals that support the valuation, we say invest now. And whenever you have an opportunity to add some more to it, you have different strategies. You have a dollar cost averaging, you can average down. There are different strategies that you can use, but it's always better for you to invest now so that in the long run you can benefit.
So
now,
what I want to
answer,
add, so what I
go
love
ahead,
what
go
you
ahead,
said,
yeah.
what you said, Raju, and I love what you said. But what I want to say to my audience is that we at NCB Capital Markets practice what we preach. Correct?
Exactly.
We practice what we preach. So you can continue to the second part.
Right. So that answers the question about when is it the best time to buy. We say no. The second question is, when is it the best time for you to sell, or when do you sell? Well, the answer really depends on each individual investor, right? You might have different reasons why you might want to not necessarily sell your entire portfolio, but you might come into the need for liquidity, meaning you might need cash to, perhaps you might find another opportunity, or maybe you might have a house that you might want to buy. So there are different reasons that people might want to sell. But I assume the question is more general, like when you see a stock and you're saying, okay, maybe I should exit this stock. So Thea would have mentioned in the last presentation, she spoke at length about the different fundamentals that we consider, that we analyze when we make a recommendation. And what we're saying is that when we make a recommendation to sell a stock, it is because we're seeing that those fundamentals would have deteriorated and no longer support the valuation that we would have put on that stock. So that's the scenario where we would make a recommendation for you to sell. And when we're saying deterioration in fundamentals, again, we have to be careful not to conflate or confuse deterioration with short-term volatility. Some companies, like a financial sector stock or a company that is exposed to the financial services sector, they tend to be cyclical in nature, meaning that their performance may rise or fall based on where the interest rate environment is. But in the long run, and when everything is summed up together, we expect that these companies should provide net positive returns to investors. So that's not what I'm saying when I say deterioration in fundamentals. What we're saying, let's say, for example, a qualitative analysis that they would have mentioned, strong management, right? Or another example, when we speak about economic moats, let's use an example, Carib Cement. We think that Carib Cement has a strong economic moat, given that they are the only company that has a license to produce cement on the island. So they're responsible for producing most of the cement on the island. But let's say all of a sudden there's another big competitor that comes into the space. They also have a license and maybe they're out competing Carib Cement. We at NCB Capital Markets, we will observe this and we might say, the fundamentals would have shifted here. It no longer has that economic moat, and perhaps the valuation that would have placed on that company needs to change. So if it's a case where the fundamentals or the valuation or the value of the business would have shifted significantly because of that development, which by the way would have been unanticipated, then we would have changed our recommendation. If we had a buy or hold, then we might shift our recommendation, but it has to be justified by a change in the fundamentals. Because remember, we recommend stocks that have strong fundamentals, but if there's a shift in that fundamentals, our recommendation would need to change or shift accordingly.
Thank you so very much,
You're welcome.
Raju. And I want to underline the word fundamentals. It is important that as we do our assessment and our analysis for what we should have in our portfolios, we have to keep our emotions out of it and look at the fundamentals and make informed decisions. Thank you so very much, Raju. Now, another word that comes to in the investment world when persons are looking at investing, there's a word out there that's called diversification. And sometimes persons may not understand it, or they may have an idea of what diversification means. But today I want us to talk about how can diversification help reduce investment risk. There's a saying in Jamaica, you don't put all the eggs, or there's a saying that says you don't put all the eggs in one basket. What does that mean in the investment world when I am looking at making good decisions for my portfolio? Thea, you can help me on that one?
Sure. Well, as always saying, you know how they say cash is king? Well, I think diversification is queen in investing. Diversifying investments is a fundamental rule when investing, and it plays an important role in helping to reduce risk. And investing is a risk in and of itself. But spreading your investments across different sectors, across different industries and asset classes can help you to reduce risk. And it does this by protecting your portfolio from poor performances of a single stock or a single sector, right? So when you think about it this way, diversification is not simply mixing stocks in your portfolio. It requires understanding how the type of stocks interact with each other. So we can consider a mix of growth stocks, and these are typically younger stocks that have a higher ceiling for growth potential. We can think about value stocks, and these tend to be undervalued stocks that trade cheaper than their asset or earnings would justify, and dividend paying stocks, right, to achieve a balanced portfolio. But bear in mind, we're not saying to put the entire universe of stock in your portfolio. Remember, one of the law of wealth creation is to own a few high quality stocks. So it's just about having a good mix that can help you to cushion a fallout in a particular sector. And I'm saying this because diversification can be underwhelming or disappointing when returns are not maximized during the market upswings. But it is important to have a protection mechanism during downturns. So investors should prepare for a downturn rather than worrying about how to avoid one. So it just means you're taking the long view when picking your investments, and also just consider the potential for an event to occur and the impact that it could have on your portfolio.
Thank you, Thea. And I love the term. A few good companies are few, a few, not 100, a few. And of course, I will also underline it is important that you have a conversation with your advisor when you're choosing these stocks and what is best suited in your portfolio based on your risk profile. Okay, so what strategies then can investors use to build long-term wealth in the stock market? This long-term is a principle that we practice, we preach in terms of having a long-term view. So when you're looking at stocks, we look at a long-term. So Raju, what strategies can investors use in building a long-term wealth, building long-term wealth in the stock market?
Sure, and I'll kick it off with the 5 laws of wealth creation. You want to be wealthy like Michael Eachin or Rockstar that was in the video? They did it by using the 5 laws of wealth creation. I know that would have mentioned it before, and I'll add some additional strategies that we can use afterwards, but I just wanted to reiterate the point. It's about the 5 laws of wealth creation, right? So when we think about it, we own a few high quality businesses. Thea and Paula would have just mentioned that, right? And then we also need to thoroughly understand the businesses that we invest in, right? That's another key component, because what's the point of investing in something that you don't understand? If you do not understand it, chances are you would be falling victim to some of the common pitfalls in investments that Thea would have mentioned in her presentation, keeping up with trying to buy a stock just because you see the price going up, even though it has weak fundamentals. You might be just caught up in the hype or the herd mentality. And when we speak about herd mentality, we mean the tendency for people or investors in general to do what they see other investors doing without really understanding the fundamentals. We also speak about ensure that these businesses are domiciled in long-term growth industries. And this is one of them that we haven't really touched upon a lot, and it's use other people's money prudently. And this is in terms of debt. Some people might think about debt as something that's bad, but your mortgage is a debt, and you use that as a way for you to access and grow generational wealth. Similarly, you can use debt if you use it prudently. You can use that to have a good startup capital that then you can use to invest, because you have a larger startup capital that allows you to invest more right now and generate significant returns. But of course, there's a risk associated with using debt. So it's not necessarily for the faint of heart, but once you have the confidence and once you're using it prudently to invest in investments that have the strong fundamentals and can give you significant returns in the long run, then it's an option that you can consider. Let me also include other strategies that you can consider when making your investments, right? So of course you need to be thinking long-term, and here's another strategy. Dividend paying stocks that pay you dividends. Another strategy that you can consider is reinvesting those dividends, because that will give you a compounding effect that will amplify the returns that you have. So the next time you get some dividend payments, I mean, if you want to spoil yourself, that's fine, but you can also consider reinvesting that dividend for additional growth. Another approach is, especially for those investors that might not have a large lump sum, is for you to invest regularly, or what we call dollar cost averaging. This is where you have small little contributions to your investment portfolio, but you're consistently investing in high quality stocks, and then in the long run you'll see where you'll be surprised as to how much that will grow. And I'm tying it back to the first presentation that we would have done, time in the market versus timing the market, when we would have seen where when you spend time in the market, investors that would have tried to use the dollar cost averaging would have seen significant returns, as opposed to someone that's trying to jump in and out trying to time the market. Another strategy that you can also consider is just trying to have so you would use the framework that I would have mentioned before, which is the laws of wealth creation. And what this can help you to do is control your emotions. Not necessarily a strategy like in terms of the reinvested dividends or the dollar cost averaging, but by having a framework, you also benefit from having greater control over your emotions. So when you see that the stock price is going up or down, you can rely on your framework and say, keep calm. I know that the stock is going down, or I see a lot of volatility in the stock, but I'm going to keep calm because I know that I have this framework. I know that the greats like Michael Lee Chins and the Warren Buffetts of the world and the Rockstars of the world would have used this strategy. And I can use it to help to control my emotions, not to panic buy or panic sell, depending on what we see happening in the market. So I think those are some of the strategies that investors can consider. Whether you're a new investor or whether you're an astute investor that has years of experience, these strategies can benefit everyone.
Thank you so very much, Raju. Boy, Raju, really, I don't know how you keep all that information in your head, but it is a lot. And we thank you for that. There are so many strategies. I remember when I used to get my dividend checks and they used to accumulate in my purse. And then I would take it to my advisor and said, do something with this because I'm not going nowhere with these things. But it really adds up. It really adds up. And now that we are in the digital age where dividends are sent straight to your account, you can set up something that you can reinvest. So we have a strategy. We have a strategy for reinvesting the income or the dividends that we gain from our stocks. We have a strategy in terms of how we use our dollar cost averaging in terms of taking advantage of either highs or lows in a market. Listen to me. So we're going to kind of shift up a thing because as I said at the start, I want you to place your questions. I'm going to try to address some of the questions that you have placed in the Q&A or in the chat. So from Claudia, yes, Claudia, hi, Claudia. Claudia is asking, what if you have short-term goals? How do you look at investing? So Janelle, would you like to take that one?
Sure. So I think that raises or brings up the importance of sitting with your advisors, right? We all have different objectives. We all have different goals. These goals are long-term, short-term. But here at NCB Capital Market, what we do is we sit with the client, we look at their objectives, we look at their risk appetite, and we match that product with it. So stocks are deemed more long-term instruments, but there are other instruments that we can look at that would be more fitting for that objective that is short-term, right? So it's always good to contact your advisors. If you're not yet a client, reach out to us, go on jntb.com and open your account with us.
Thank you, John. Also, I see Marvin Fletcher is asking, what are the average returns on NCB mutual funds? So so he's asking, what are the average returns on NCB mutual funds? Or really, our unit trust suite of products? We have a suite. So I will allow Jan to just think about it a bit, or can you ready to go on? But we have different asset classes for our mutual funds. And Jan, you want to just break down in terms of the different asset classes and then in terms of what the average returns have been over the last 12 months. We still come back to you on that one, Marvin. We just allow Jan to get the information. Next question that I am seeing here. So remember, ladies and gentlemen, please post your questions in the Q&A section as well as in the chat area. Okay, so we have another question. It says, what is the minimum you would recommend a beginner to start investing with? So the minimum to start investing with, I mean, that is Jan's question, but I am going to, Jan, you can take that or you want to come back to that?
Well, the minimum in investment is really dependent on the product that you're investing in, right? Being that we're on the topic of stocks, did you know that you can buy 1 unit of a stock? You can actually buy 1 unit of a stock. So it's really dependent on what your objectives are and based on the conversation with your advisor, how much you'd start with. But my rule of thumb is when buying stocks, you can try with a minimum of 1,000 units of each stock, but there's no real minimum when buying stocks. You can start with buying 1 unit, and remember, the return you make is dependent on the amount you invest in or you start investing with.
Wonderful. So Sheldon Gruber is asking, what would you say to a new investor that purchased Dolphin Cove stock and the price fell so drastically? This is a fundamental question, Raju.
Yes, it is. And it's a very tricky question to answer, but I'll try to give my best answer. So Sheldon is making reference to the news that would have come out recently that the parent company of the popular tourist attraction in Jamaica, Dolphin Cove, would have filed for bankruptcy, right? That was what came out in the news. However, afterwards, the parent company would have come out and tried to clear the air to say that this is not a bankruptcy. They're just trying to restructure their debts, and that's what they're trying to do. But yes, it is a drastic shift in fundamentals. The only thing that I'd say now is an investor that has the patience, because this is still ongoing news. We haven't gotten the full picture yet, right? So it's going to be a tricky one. And what I'd say to that investor is they'll need to monitor and see what is going on. NCB Capital Markets will be doing that as well. We'll be monitoring it because we did get wind of this as soon as the news broke out. And obviously the stock price would have, I believe the stock price would have declined by at least 20% or more after the news broke. But what we're doing currently is we're monitoring, because it could be an opportunity as well, because as the parent company would have come out and made the communication that it's not necessarily bankruptcy, meaning that it's not necessarily a threat to the subsidiary Dolphin Cove, which is listed on the Jamaica Stock Exchange. It could be something that affects the company on the parent level, where they will have to arrange with their creditors and restructure how that debt is repaid. So what I'd say about that is that we need to be a little bit more patient and see what it really means for the fundamental, because it could just be news that was misinterpreted by the market and there was panic selling, and it might be an opportunity for the investor to buy. However, I do understand that at this point in time, especially if it's a significant amount of money that new investor would have invested, it can be very taxing on them emotionally. But it's just for them to remain vigilant, for them to keep tabs on the market recap that the NCB Capital Markets research team publishes on a weekly basis, on a daily basis on our website, as well as any additional changes to the recommendations that we will publish in your email, which is why it's important for you to have a broker like NCB Capital Markets at your side.
Wonderful.
We have the resources, we have the expertise, and we'll be monitoring all of these news to ensure that we give you up-to-date information as soon as possible.
Wonderful. Thank you so very much, Raju. Thank you so much. Jan, are you ready to answer your question, is it? Okay, so we're going to move on to another question. There's a question that came in that says, my question is, how do we get to our assigned advisor? And how do I do this? Oh, I'm so sorry. My question is, how do we get to our assigned advisor? Or I need to have $1 million first to talk to an advisor? No. Jan, you are on the hot seat, but definitely we would encourage you to send an email to ncbcapinfo@jncb.com. We're going to also put it in the chat, ncbcapinfo@jncb.com, or you can call us at 876-960-7108. Though if you're not hearing from your wealth advisor, we have a lot of clients. We just ask you just call us at those numbers, 960-7108. And I wanted to plug the part in terms of when you buy that one stock or the first 1,000 units at NCB Capital Markets, we basically get you digitally enabled. So you'll be able to look at it, get the app, go in, and you will see a list of stocks, and you continue or do your analysis. You can just go in and just purchase your 1,000 stocks just like that. And your advisor and the wealth support officers that are in the branch, they will help you. Now, we're going to be talking about our mutual funds and how to get started with an investment account. And I'm going to just ask Jan to just kind of give an overview. How much money do you need to have in terms of opening an investment account, the basic requirements of opening an investment account at NCB Capital Markets, and, you know, and then also in terms of how we go into investing into our unit trust products, which basically take the question out of investing when you do so. So over to you, Jan.
All right, great. Thanks, Paula. All right, so as I stated before, investment is for everyone. So there's no cost to it, but the minimum may depend on which product that you're investing in. So as I said before, with stocks, you can buy 1 unit of a stock. Now, for investors who may not have the time, they may not have the expertise yet to buy single units or to buy stocks outright, you can always invest in our Caribbean Equity Fund. And it's a part of our unit trust suite of products. And basically it's invested in different stocks on Jamaica Stock Exchange. Now, to invest in this, the minimum is 50,000 to start. You can add in increments of 5,000. And you can also set a recurring order. So for instance, if you decide to invest 10,000 on a monthly basis, you can actually go in on our NCB, on the app or on the NCB website and actually set a recurring order that every month or every quarter, depending on when, you can actually go in, that the funds will actually be pulled from your account and invested in the Caribbean Equity Fund. Now, as I said before, you can always do both. So if there's a specific stock that you want to invest in, you can always invest in that specific stock. But if you want to just leave it to the professionals to do what they do best, you can always invest in the Caribbean Equity Fund as well. Right? Now, to open an account here at NCB Capital Markets, it's pretty simple. So you need your ID, a TRN, a proof of address, which can be a bill or financial statement. You need a proof of income, which can be a pay slip or a letter from your employer. And you can always visit the branch closest to you. There is an advisor there. Or you can always go onto jncb.com and open your account there. And remember, don't forget to download the Wealth Connect app. That's where you can go on, you can monitor the assets that you have purchased. You can buy and sell there as well. So it's really a very insightful tool that will keep you abreast of the market and keep you abreast of your accounts as well. So yeah, that's it.
Well, thank you, Jan. Thank you so very much. Are there any more questions that we need to address in the chat? Please feel free to put it in. Okay, so I see, yes, I see them. So does that mean I can open a stockbroker account with 1,000 Jamaican dollars? Jan?
So remember, with everything we have to plan, predict, and persevere, right? So you're going to go in, you're going to speak to your advisor. You're doing a stock account. Yes, you can actually open it with 1,000, depending on which stock you're buying. But we're going to plan because we know you have an objective, right? So we want to make sure that that objective, we match that objective with the product or the stock. And that may need you to actually set set an amount that you can actually put aside on a monthly basis. That may be more than the 1,000. But yes, in short, you can start buying stocks with that amount.
Okay, thank you. How can I get started with an investment account from the USA? I think that's a very good question.
All right, so pretty much, it's actually the same. So if you are in fact an NCB account holder, you can actually go online and open the account from there. But also you'd still need to supply, if you're not an NCB account holder, you may need to visit a branch or get the documents notarized, your ID, TRN, proof of address, and so on. So you can in fact open the account from the US, but it would be good to just reach out to us. The Wealth Hub email was given earlier, so you can actually reach out to us at that email. Paulo? Yes, so it's ncbcapinfo@jncb.com, or you can call 960-7108.
Perfect. I hope that answers your question, ma'am. Yes, we take those accounts wherever and we follow the rules. We follow the rules. Jessica asked, I asked before and would still like an answer. She says, for DCA, if I have $10,000 per month, is it sensible to split between 2 to 3 stocks, or should I select one and stick to that one? Excellent question. Raju, you want to take that one?
Sure, no problem. And who was the person that asked that question?
Jessica asked.
Oh, apologies, Jessica. It seems as if we didn't see that question, but sure, we can answer that question for you. So you remember what Thea said about diversification? So that's one way you can think about it. It might make sense for you to invest in more than one stock, assuming that they all have strong fundamentals. But if you're going to work with the recommendations from NCB in terms of the buy recommendations, you can go on the assumption that we are recommending them because they have strong fundamentals. So I'd recommend that if you have the opportunity to invest in more than one stock that all have strong fundamentals, that, for example, would come from an NCB market guide where we publish these buy recommendations on a weekly basis, which is, by the way, available on the website, but you can also get it a lot faster if you're a client, because that will be emailed directly to your inbox. You will see different options that you can choose from in terms of stocks, because some people might not necessarily like a stock for different reasons, not that the stock in terms of its fundamentals are weak or anything like that. So for example, some investors might even have a moral disconnect with a stock, for example, like Supreme Ventures, because it's gambling, for example. But there are different reasons that you can think about it when you're picking different stocks. But I believe the best rule of thumb, as Thea would have emphasized so eloquently, you want to have some diversification in your account. So if you have the opportunity to invest in more than one stock, as long as they have strong fundamentals, by all means. But if you see a one stock as well that you think that, okay, you have strong conviction in this stock and you want to add some more to it, by, investing a little piece every now and then. If you have $1,000 every week or $10,000 every month, you can invest it in it. So it really depends on what your style is, and we will accommodate that. But I think the rule of thumb, my personal opinion is the rule of thumb is to try to have some diversification, so you can add more than one stock.
Thank you, Raju. Wonderful. So one of the things I wanted to just plug as well is that once you are a client with us, we launched our risk profiler a few weeks ago. And it helps us and it helps you to understand what your investment style is. So we're not just going to be saying, okay, just invest in stocks alone. We look at your investment style. We look at what assets would best fit your investment style along with your investment goals and what stage of life you are at. So again, we will give you the information, but we ask that you take the time and you have a conversation with your wealth advisor. And also we are promoting our risk profiler. That is a WhatsApp bot, user-friendly chat bot called Simone that will take you through some questions that will help you to get there. And we're going to give you that information later. Another question, will there be a webinar on investing in bonds? Eventually, yes, they will. So stay tuned to this channel, okay? So we are almost at the end. And we want to just say, all right, so for the risk profiler, I want you to take out your phones, or if you have your phones, take this number, 876-728-7075. You're going to add it to your contacts, and you're going to, so let me repeat the number, 876-728-7075. You're going to add it to your contacts, and you are going to create a WhatsApp message open up the WhatsApp chat from this number, and you're going to type my wealth, no space. It can be in caps, it can be in lowercase, my wealth. And you're going to see our virtual assistant, Simone, who is going to take you through understanding what your investment style is. So I'll repeat the number, and I think also I would ask it to be placed in the chat. It is in the chat, I believe, yes. 876-728-7075. Now, on to our very hot topic. And I have been asking, what about Trans-Jamaican Highway? Yes, I see it. I see the questions. I see the comments. And let me tell you, so it dropped today. The prospectus came out today. So for those who don't know, for those of us who travel on the South Coast and from Kingston to St. Elizabeth or from Kingston to May Pen, the Trans-Jamaican Highway, they have an offer for sale. And we are going to be talking about it, not today, but on Thursday. So Thursday at 6, our webinar will be on this channel. So we want you to come back, and we're going to be talking about everything Trans-Jamaican Highway, how to own a piece of the road that we travel on. Okay? So do I have everybody coming on? I want you to come on, tell your neighbor, tell your friend. This, when you talk about fundamentals, this is the time that you're going to make the decision, because we're going to go through it and you're going to practice. You're going to put the theory into practice. All that we've been talking about, fundamentals and long growth industries and all of this. Finally, what perfect timing is for you to participate and to get that fundamental information in the Trans-Jamaican Highway offer for sale. So guys, be with us on Thursday at 6 p.m. and get ready to practice what you have learned. Okay? So, is there anything else that you or our panelists would want to say so as we wrap up? But we have 3 minutes and we are sticking to the time. We also, while the panelists are giving their closing arguments, I want everyone to just go to, there's a poll that came up on the screen, and we want to hear from you. We want to hear from you. So please, so those persons who said I never hear from the wealth advisor, listen, just take the poll. I beg of you, I ask of you, if you got some good information this evening, if you felt like you're ready to go to the next level in your investment strategy, and you have another investment goal that you want to go towards, take this poll for me. Please take the few minutes, take the poll, and let us do this, because NCB Capital Markets is your wealth partner, and we are here to take you on this journey. So any closing comments from my panelists as our audience take the poll and getting ready for our next webinar on Thursday?
Sure, Paula. I'll close with just saying, so don't wait too long to start investing. You know, the younger you are, the more you stand to gain from investing due to compound interest. And I mentioned compound interest a few times, and it just means that your contribution earn interest on the initial amount invested and on the interest that you accumulate over time. So the earlier you start investing, the greater potential for investment earnings. And if you aren't investing yet, ask yourself, why not? Especially if you're early in your career, time is on your side. But truthfully, you can start anytime. So remember, starting out small is better than not starting at all. Do your due diligence, get your hand muddy. NCB is here to help you. We have our wealth advisors, we have our expertise, but you still have a role to play, because we're all investing like owners.
Thank you, Thea. Well said. Raju?
I couldn't say it any better myself. Pia basically covered all the points, right, guys? Invest now. That's the bottom line. Invest now so that you can build that generational wealth, not just for yourself, for your family, but more broadly for the betterment of Jamaica. And we all have a role to play. We all can win in this. It's not a zero-sum game. We can all win by investing like owners. You want to be like Michael Leachin, you want to be like Roxroy, you want to be like Warren Buffett, invest now, guys. But always remember, it's based on the fundamentals. That's my 2
Okay,
cents.
wonderful, wonderful. Jan.
Yeah, man.
Jan.
So I see Carrie Ann Wilson in the chat saying she appreciate the hand-holding approach being adopted by NCB. And I want to tell you that's what we're here for. So at NTB, we pride ourselves in sitting down with each individual and making sure that we know them and we know their dreams and aspirations, and we match the products to help them achieve those goals in the time that they set out to achieve it. All right, so talk to an advisor today. We're here to help.
Thank you so very much, Jan. So on behalf of my NCB Wealth team, we want to say thank you for joining us this evening. And yes, we are helping you on your wealth journey. And looking forward to seeing you on Thursday, because we're going to have an exciting time and we are going to own the road. So guys, on behalf of everyone, have a good evening and thank you again.